Hello, good afternoon. We're here today to have our webinar about the program Fundamentals of Finance. I'm joined today by Professor Cláudia Custódio, and she's a professor of finance. She'll have a little bit of time to introduce herself in about 5 minutes once I go through the agenda. But today what we want to do is have about 30 minutes to talk to you a little bit about Imperial College, about the program itself, a little bit about the structure, what's the faculty, and what we will learn. And then there's also some time at the end to ask some questions. So if you want to ask some questions already, and then we'll go back to them at the end, we'll try at the end to answer as many questions as possible. So that's it. So Cláudia, let's go to the first slide. So just talk to you a little bit about Imperial College and who we are and where executive education sits. So executive education actually sits within the business school at Imperial College, and the business school is one of the faculties that exists for Imperial College. You can see some of the topics there. So we are definitely a global leader in science. We have been ranked for many years top schools in the world, have 14 Nobel Prize winners. And we try to attract a lot of minds to come, not only to do research, but also to be able to deliver on programs like Fundamentals of Finance. Our participants, clients, they come from a lot of different backgrounds, a lot of different companies, a lot of different worlds. So it's all of our programs, executive education, are actually quite good to get some experience about different people. As of today, the Fundamentals of Finance program is going to be delivered on a virtual approach. With COVID, one of the modifications that we had to do to our learning was that we had to have programs that are actually virtually, that you can do it from your own office or your own house, and we can deliver the excellent executive education programs to your home or to your work. So the virtual programs actually deliver the same content that we had on our on-campus ones, but on your computer via Zoom. So this program actually takes 3 weeks. The live sessions are done via Zoom. All of those sessions not only include faculty like Cláudia teaching, but also activities, discussions, and exercises. And we also give support to networking. And all of that is done on our learning platform. So one of the things that can you go back, Cláudia, please? Yes. One of the things that we provide is not only you have the space within the program itself, but then you get to know others within our learning platform. So once you're in the program, and you can connect not only at the live sessions, but you can also connect on the platform with other of the participants. Next slide, please. Okay, so let's talk a little bit about the program structure. So the program actually starts on the 7th of October. And it starts what we call the orientation week. So within this orientation week, we give you access to the platform, and then you can go in and understand how the program is going to be delivered. You're going to have an opportunity to familiarize yourself with the platform, engage with the content, the faculty, and also the fellow participants that are going to join with you. Yeah. Then the first actual live session will start on the 14th of October. Yeah, so our sessions are about 3 to 4 hours time on this one. We also have the timetable available. So if you have any questions about the full timetable, you can contact me or my colleague Hannah to send that to you. But the program pretty much includes 3 weeks of learning with twice-a-week sessions. Like I said, all of live sessions are on Zoom, but they are recorded. So let's say that for some reason you can't come to one of the sessions. We always upload the learning into the platform so that if you want to see it again or see it for the first time, you can just log into the platform and have access to all of it. We also provide access 6 months after the program for all of the learning. So if you want to go back in 3 months' time and revisit, you have access to all of it so that you can go back in time. Again, all of those activities are done on the live sessions, but they're also available on the hub for you to look at. Once you've completed the program, you get a digital certificate from Imperial College Business School, and that certificate can be actually attached to your LinkedIn profile, for example, or you can print it off. So it's a really interesting and nice way just to put Imperial College certificate in your LinkedIn profile. Next slide, please. So now I'm going to pass the floor to Professor Cláudia, and she's going to talk a little bit about herself, about the faculty, and also some of the learnings, some of the examples that you have within the program. Go ahead.
Thank you, José. So good afternoon, everyone. My name is Cláudia Custódio. I'm an associate professor of finance at Imperial College Business School, and I am the program director for these fundamentals of finance program. I co-teach the program with Professor Franklin Allen, who's a professor of finance at the business school as well, and the director of the Brevenauer Center for Research. So let me guide you. Let me guide you through the program. So on the first week, we start with the program Welcome, and as José was mentioning, all of the participants have access to the hub and can basically get to know what the material we are going to cover, and get to know the faculty and other participants as well. Also, Franklin, in our first live session, we'll do an overview of the current situation in finance and economics. This is usually a very interesting session to attend, and especially given all of the current situation in financial markets that I would say is of particular value. So then, building up on this introduction, we continue to week 2. So I will be starting the program. So I will be basically be with participants on week 2, and we start with a topic that is called using financial information intelligently. So this is basically for us to get in contact with what is the common language in finance, which is basically financial accounting and financial statements. So throughout this week, we will basically make use of a real life example. So we will be analyzing the financial statements and calculating different measures of performance for GlaxoSmithKline. So once we are done with week 1, and once we get really comfortable with the language of finance, we will build up on that, and we will continue on week 3. So on week 3, Professor Franklin Allen is going to be with you, and he's going to go through one of the most popular ways of valuing financial assets and firms, which is the discounted cash flow method. So he will cover some short examples and some short case studies on how to apply the discounted cash flow method, and then he will move on to a different topic, which is the topic of capital structure. At the end, he will wrap it up, and he will basically put the different topics all together and we will try to make sense of the whole program by combining the capital structure topic with financial strategy, try to understand how this whole thing fits together into the company defining and making a coherent financial strategy. Okay, so I will now try to give you a taste of what we are going to do in the course and throughout the lectures. And I will start by defining what corporate finance is, given that this is the main topic of our program. So corporate finance is mostly about financial managers making 2 types of decisions. The first decision is an investment decision. So basically, what long-term investments should firms do? And in order to make these type of decisions, there are 2 things that we need to know, that we need to estimate, and we will learn that throughout the course. The first thing is to estimate what are the cash flows that these projects, these long-term investments are going to generate. And the second thing is, what is the cost of capital for investing in such project? So once we have these two building blocks, we can apply methods such as the method I was mentioning before, the discounted cash flow methods, in order to put a number into these investment decision and figure out whether or not this is worth it, figuring out whether we should invest or not. The second important decision that financial managers need to make, and that goes hand to hand with the investment decision, is the financing decision. So once I decide that I want to take on an investment project, the question that comes next is, how am I going to finance such project? So should a company raise equity? Should a company raise debt? What is the mix between debt and equity that the company should choose? Should it go short term? Should it go long term? How should we do this? And how should we do this in such a way that matches my investment decision, that is coherent with my strategic investment decision that I was mentioning before? So let me now use an analogy for what I was just mentioning. So I like to think about these two questions and use the analogy of the balance sheet of a company. So on the balance sheet of a company, what we have is, on the left-hand side, the assets that a company holds. And we can think about current assets. And here in your current assets, we're going to have, say, cash or inventories for the products that the company sells. And we have fixed assets. So fixed assets are typically long-term assets that the company has, say, a building or a vehicle. So these are going to be the fixed assets. On the right-hand side of the balance sheet, we are going to have, or this is going to represent the firm value to the different set of investors that have invested in the firm. So here, in a very simple way, we split it into debt and liabilities. And taking into account the maturity of those liabilities, we can split it into current liabilities, the ones that are due in less than 1 year, and long-term liabilities or long-term debt, the liabilities that are due in more than 1 year. And we have what it is, the residual claims over the assets of the firm, which we call shareholders' equity. I'm going to rearrange this balance sheet slightly in order to match it with the two questions that I was talking about. So what I'm going to do is I'm going to get the current liabilities that just before were here on the right-hand side, and I'm going to put it with a minus sign on the left-hand side of the balance sheet. Okay, and I can do this without messing up the two sides of the balance sheet that, by the way, I should have mentioned before, they should be equal, right? So the total assets always equal the total liabilities plus equity. So if I rearrange my balance sheet slightly and I put my current liabilities on the left-hand side of my balance sheet, I now have on the left-hand side 2 blocks. The top block is going to be what we call net working capital, which corresponds to the difference between current assets and current liabilities. And I still have my long-term assets that I mentioned before. Okay, so with that, with the left-hand side rearranged in such a way, I can now call it total invested capital. Okay, so now the left-hand side of my balance sheet is going to reflect the first question I mentioned at the very beginning, is going to reflect the investment decisions that the company makes. And the right-hand side of the balance sheet now is only going to have the long-term debt and the shareholders' equity, basically financing decisions that are taken for the long run. So as I was mentioning now, the left-hand side is going to reflect the decisions that the company has made in terms of investment decisions, with this bottom block reflecting the long-term investments that the company has made. And of course, it should make these decisions in order to maximize value. And throughout the course, we are going to learn what I mean by maximizing value and putting a number into these decisions. And then on the right-hand side, I will be able to answer the second question, right? And figure out how the firm is going to finance those long-term investment decisions, right? So should it go for debt? Should it go for equity? So this brings us to one of the most important decisions that the companies have to make, and that was actually worth it a Nobel Prize. Okay, so Modigliani and Miller won the Nobel Prize in economics for giving us a framework on how to think about capital structure. So this is going to be one of the topics that we're going to cover. And believe it or not, the idea here is as simple as thinking of the company as a pie and how to split the pie into different slices and who's going to get the different slices. So the goal of the manager is obviously going to be increasing the size of the pie. How does the manager increase the size of the pie? Well, by making good investment decisions. So investing in the right projects that add value is going to increase the size of the pie. And then the capital structure decision is going to be about how to best slice this pie in such a way that we don't destroy the value that we just created by making the right investment decisions. So for instance, should I go with 50% debt, 50% equity? Or should I be more conservative in terms of my capital structure? Should I go with only 20% debt, 75% equity, or 35% or 30% equity, 70% debt? So here I would be a bit more aggressive, taking on a bit more debt. So why am I mentioning being more conservative, being more aggressive? Well, because obviously, if we take on more debt, right, so we can put the company into bankruptcy risk, which is something that doesn't happen if I, for instance, choose to finance my company with only equity. So these are the type of firm level decisions that we are going to discuss throughout the course. Obviously, we are always going to have in mind that the company operates in a broader context, the context of financial markets. And this graph basically gives you a sense of what this context is and what are the interactions that the company has with other players in this in the economic context. So this yellow box we have here on the left-hand side represents the firm. As I was mentioning, the firm is going to invest in projects, it's going to hold some real assets. And at the same time, how is the company going to finance these real assets? Well, it's going to issue securities that is going to sell in financial markets. So the two most common securities we are talking about are shares, which represent the equity I was mentioning before, and bonds, which represent long-term debt that I mentioned before as well. So these securities are going to be traded in financial markets, are going to be held by investors that obviously are going to expect to receive some return for this investment. So how do they get to receive this return? Well, through the cash flows that the company is going to generate. So remember, the company invests in real assets. These real assets are going to generate cash flows. These cash flows are going to then be used to compensate, to pay out to these two set of investors I mentioned, the ones that are going to buy equity, the ones that are going to buy shares, and the ones that are going to buy the bonds of the company. The investors that buy the shares of the company are going to receive dividends, and the ones that invested in bonds are going to receive interest and debt payments. Well, if we were to live in a world without taxes, I would just stop this example right here. It happens that we do live in a world with taxes, so there is sort of an intermediate step in this process. So what's going to happen is that out of the cash flows that the company generates, the company will have to pay some taxes, and this is going to typically happen before dividends and debt payments are made. Well, there is an additional decision that the company can make. So out of the cash flows that these projects generate, the company can also decide to retain some of these cash flows, as opposed to paying it out immediately to shareholders and bondholders. So in a sense, the company can delay this decision to pay out to investors if the company has good projects available to invest, good growth opportunities. And in that case, what the company should do is to retain part of these cash flows and reinvest it in the business, right? So, and here I would be talking about this arrow where part of these cash flows are retained and reinvested in the firm. Of course, in that case, the investors I mentioned before, bondholders and equity holders, would expect to receive their payout, would expect to be compensated more in the long run, right? So out of the cash flows that these new investments would be generated. So in a nutshell, that's basically what we are going to be covering throughout the course. This is just an example of the certificate you are going to get at the end, as José was mentioning before, and I believe you get some nice add into your LinkedIn webpage that you can share in social media. So I think now we will go to Q&A.
Perfect. So you can either send us on the chat, or you just put the Q&A there. One of the questions that people always ask is, so what's the target audience? So would I fit in a program like this one? So these are mainly programs for people that don't have experience in finance. So this could be someone that works in marketing, that works in sales, that works in any function outside of finance, that wants to have an understanding of finance and to have it in a condensed way and taught by faculty that really knows and have experience both in the academic world, but also in the world of business. So if you are looking to expand your finance understanding so that you can have discussions at the senior level, so this is the program for you. We do have a couple of questions here. So one of the questions is the program based on case studies? Are they real? And then can you give us some examples of the case studies?
Thank you, José. So the answer is yes. So the program has both a mix of a theoretical background where we go through the concepts and applications of those concepts to the real world. And we do use case studies, and we do use real life data. So for instance, for the very first part of the program, where we go through financial statements and understanding a bit of financial accounting and how to calculate measures of business performance, we always use the case of GlaxoSmithKline. So we basically go through the actual real financial statements that are produced by, and the annual report that is produced by GlaxoSmithKline, and just crunch the numbers and calculate some measures of business performance based on these actual real numbers. So that's one example. So in terms of investment decisions, what we do is we use several smaller case studies just to illustrate different types of investment decisions. So those are more stylized examples. And then we wrap it up with, again, a real life case study for the topic of capital structure. So for capital structure, we go through the case study of Diageo. So Diageo is a company that it's in the beverages industry. And basically, we go through the decision of picking up what would be the optimal capital structure for Diageo. So basically, what would be the optimal mix between debt and equity that Diageo should pick, given the nature of the business, right? And given the trade-offs between the debt, the benefits and the costs and benefits of that Diageo actually faces. So those are the main two real life case studies that we go through. GlaxoSmithKline for the first part and Diageo for the capital structure decision.
Okay, perfect. A couple more questions. So will both faculty members be online during the live sessions?
So yeah, so throughout the live sessions, so the program director, which is me, is always going to be there, and and basically Franklin Allen is going to be there for the second part of the course. Okay.
This question I can answer. So do you only run this program virtually? So the plan, so right now we're still running virtually towards the end of this year, so in October, but there is a plan to run a face-to-face in the summer of Fundamentals of Finance. So instead of being around 3 weeks, it's going to be just 5 days. So it's going to be from Monday to Friday, and the dates, I think, they're on the website. But you can also contact me. I just remember that we didn't put my email address there, but you can just Google my name and then Imperial College and you'll find my contacts. The dates, if they're not there, they're about to be published. So we will have a South Kensington campus program towards the summer, which is an option, a different option from this virtual one that we're going to be running right now. So for those people that can travel to the UK, those that are unable to travel or their schedule doesn't fit the full week, this is a perfect option for them. And then the last question I have here is, what other resources are available to participants? So obviously you mentioned that there's the hub and the content is there, but is there anything else that they get?
So yeah, so for the whole of the lecture notes and examples and case studies, everything is going to be in the hub. And another very nice thing that this program has, I would say, is the fact that we have, so Professor Franklin Allen has written a quite famous book in corporate finance. So that's called Principles of Corporate Finance. So that's the Brearley Myers Allen book, which is extensively used throughout the business schools of the world. And basically, if you come to the program, you will have access to the online version of the book, and you can go through all of the additional materials, and you can do your readings for the topics that we cover in the program using Franklin's textbook, which is I would say a very nice extra resource that we provide to our participants.
Okay. If there are no other questions, I don't see any more questions here on the Q&A. I would like to thank Cláudia for the time and to share this half an hour with us. If you do have any questions about the program, you can find my contact details on the Executive Education website. You can also find Claudia's contacts on the Executive Education website, on the Business School website. So if you have any questions about the content as well. And also my colleague, Hannah Hyde, which is the person responsible for the program, is also available. And if you need some additional information, you can download the brochure from the program. But we look forward to receiving many of you on the program virtually when it starts on the 7th of October. And that's it. Thank you very much. And we hope to see you soon, either virtually or on campus at Imperial College.
Thank you. Bye-bye.
Thank you.